Hey, this is Tyler Braun with the Tranel Financial Group. I hope all of you are having a great day. Just got done having a conversation with a client, and the question came up about investing. And I challenged him a little bit, and I said, what are you investing for? And he didn't really know how to answer that question. He said, I want to accrue wealth, but really there's more than that, right? And this is a different way to think about your future, but you need to invest on purpose. Now, stick with me. This is going to get very, very detailed, and we're going to go through some scenarios for this specific client. But really, what do you want with your investment? And that's the question you need to ask yourself, right? Why am I saving this money? For some people, it might be just accruing assets. For some people, it's income, growth, freedom. But for this specific client, he said he wanted to build a multiple of his wealth, but really what he wanted was the income that generated so he could have the freedom in his lifestyle that he was seeking. So his goal, when we sat down and we peeled back all the layers of the onion, was to be debt-free and to have over $5,000 a month of income coming in. And when we looked at it, he's a good saver. We said, how can we do that? And a true passion he's always had is real estate, and he's wanted to invest in real estate for some time, but he also knows that he wants to invest in the stock market as well. So, he wants a happy medium between the two. And when we sat down, we really put together an in-depth strategy. I'm going to show you a scenario here. This is strictly just an example, right? So every person is different. Every detail is different. Life changes for people, but this is an example of what we put together for him. And I hope it really helps give some clarity to it. So, in terms of their situation, this is Bob and Jane, right? They wanted to own real estate. They were seeking to build income for retirement, and they wanted to retire in 10 years. They're good savers. They're saving about $30,000 a year. It's $2,500 a month currently with their jobs. And they're looking to build some form of passive income that totals about $5,000 a month within the next 10-year period. That's their goal, right? And how can we do that? So the big piece behind it is they want to be debt-free, and they want to take part in the market and buy real estate. So currently they had about a $400,000 investment into just some mutual funds, right? Some just growth-oriented mutual funds. And that's really what sparked the question is, what are these for, and what is the purpose behind them, and are they working as effectively as possible? And the question behind it was, or the answer behind that question was just they put money away every month, and they set it and forget it, and they've been doing it for years and years and years, and it just grew to the sum of the 400,000. So basically what we did is we realigned their investments with their goals, right? We reallocated that portfolio to generate a high yield or a high dividend. We used a lot of what we call dividend aristocrats. That's a company that has increased its dividend for 25 consecutive years. And we focus heavily on what are called qualified dividends, right? That's a dividend that kicks out a lower tax rate when you take it. So ultimately, at a $400,000 investment, for this example, they were getting approximately a 3.65% dividend. That's $14,600 per year. When we focus on a dividend aristocrat, that's a company that's increased a dividend for 25 consecutive years, just like I said before. Dividends pay, right? Dividends pay based on the number of shares you own, not the share price. So what that means is we're able to remove some of that factor of market volatility and focus on the income stream that the shares are providing to the individuals, right? So what they did is they took that 400,000, and that 14.6 of dividends allows them to have additional cash flow to start to become debt-free. It starts the debt snowball. So they went out and they purchased a property for $100,000 at a 4% interest rate. That would leave them with a mortgage of about $477 a month, right? There's a whole lot of other expenses with investing in real estate that we're not going to dive through today, but you have property taxes, insurance, carrying costs, just miscellaneous expenditures, capital expenditures, etc. But after all of those, they were generating approximately $400 a month in profit. So they were paying the $477 already. They have $400 a month in their pocket as profit after all expenses are paid. So the big goal, right? They want to be debt free. So I said, you need to reinvest your profits to be debt-free in 10 years, right? We want $5,000 a month of income 10 years from now, and we want to be debt-free. So they owe 100 grand, and we did the calculations. If we overpay the mortgage by approximately, by the approximate month distribution of the dividends, right? So the 14,600 that comes from the dividend, if you divided it by 12, just for easy math, that's approximately $1,216 a month in dividends. We said take that plus the profit on a monthly basis, that's the $1,616 a month, and reinvest it. Reinvest it back into your future. And by doing that, when we ran the amortization numbers, they pay off that mortgage in 4.5 years. So they did a 30-year fixed mortgage. They actually paid it off in a total of 4.5 years. And this freed up an additional almost $500 a month of cash flow that they can now apply to the next property. So when we run that math and we look at it, you have to take another scenario into account, right? Because this is where the rich get richer. It's building wealth in the background. Remember, Bob and Jane were saving $2,500 a month. All we did is use their existing portfolio to springboard them forward. They're still saving $30,000 a year, but instead of buying those mutual funds, they're utilizing the strategy to buy the dividends that they're generating, right? So they put $30,000 in for that 4.5-year period. Let's just take 4 years, for example. If they added that $30,000 to that portfolio for that 4-year period, right, that's $120,000 in contributions, right? If you do that, and I just totaled it here to give you an example, if they continued to do that in the background, $2,500 a month for 10 years, that's $300,000 in contributions. That alone would total them $2,100 a month going forward after the 10 years. But let's take a step back and just look at where we are in example one. So like we talked about, the property would be paid off within that 4.5-year time period in example one. And if we apply the dividends that we talked about originally, that's the $1,216, plus we continue to fund the investment portfolio for that 4-year period, that's an additional $30,000 a year for 4 years. That's $120,000 at a 3.65% dividend rate. That's going to get you another $365 a month. We add that with the cash flow of the rental property that was freed up and the $477 by paying off the mortgage. We're going to have a total of $2,458 to apply to the next property, right? And for property two, if we do the exact same math we did in property one, instead of paying it off in 4.5 years, we're actually paying it off in 3 years. What that does is it frees up an additional $877 per month again that can be applied to your third property. So they had a passion for real estate. They wanted to be debt free. They needed three properties to get them to their goal. So we're now have $3,608 a month that's freed up through this strategy. And what's beautiful about it, look at it. If we're 3 years in the future, right? The first property took 4.5 years to pay off. The next property took 3 years to pay off. So we're in year 7, right? We have the $1,216 from the original $400,000 investment. You have $365 a month, which is from the 4.5 years of contributions while we're paying that mortgage off into the dividend portfolio. And then the $273 is from the next 3 years of contributions that you're making into the dividend portfolio. This is the $400 of cash flow and the previous mortgage payment that was freed up with property number one. This was the $400 in cash flow plus the $477 mortgage payment freed up in property two. That's how we're getting the $3,608 per month. Take that into property number 3, right? And ultimately, when we do that, we free up an additional $877 because it takes 3 years to pay off this mortgage. We're in year 10 now. The $3,608 plus the $877, that's owning property number 3. And remember, you had the last 3 years that you contributed into your investment account. That gets you a total monthly income of $4,758 per month, and you have no mortgage. So you own 3 rental properties, no mortgage, and have an investment portfolio kicking out cash flow and dividends, And for Bob and Jane in that example, it got them to that $5,000 approximate goal on a monthly basis with no debt in a 10-year period. So this is one example of getting that debt snowball started and looking at real estate differently, and including your investment portfolio into that mix. So it's just investing on purpose. What are you investing for, and how do we get it working most effectively for you? I hope you enjoyed this. I know it was a little bit long, but I'd love to go into detail about your situation. Please feel free to reach out and give us a call or shoot us an email, and we can have a quick discussion. Take care, and thank you again.